So Frank, what's your investment outlook?
We are globally diversified. I mentioned that we actually operating over 3 different continents. And while some countries like UK actually have put maybe more stalled pipeline or reduced pipeline, in other countries are very vivid, and lively pipeline available. Especially if you go to Canada, which is one of the light towers when it comes actually to infrastructure investments, but also Nordic countries, Norway, they've got a pipeline, Germany, Belgium, Netherlands, and there's an emerging market in the US. We still joke actually that there are more conferences than there are deals in the US, but we still we see that there's more deals coming in the US in our favor. So we are very confident that the pipeline with our global platform is sufficient for our growth opportunities.
Interesting, there's a growing market in the US. Phil, what's your outlook?
So you mentioned the National Infrastructure and Projects Authority pipeline of 600 billion that was identified for the next decade or so of UK infrastructure. That pointed to around 300 billion of private sector investment required as part of that. On top of that, we have increased climate change commitments, so net zero by 2050, which point to a massive transformation in the way we use energy or heat or transport. So there's a significant investment requirement across all of those sectors. I think from a UK focus, the question for us is how policy will support that and what mechanisms a government will introduce to do so. The recent infrastructure finance review we think is an interesting exercise by the government to move away from models like PFI and PF2 that have historically served infrastructure and look at new models. So we'll look closely at that and hope that goes some way to promoting that huge potential for infrastructure development.
Interesting, a lot of demand for infrastructure, 300 billion.
Sure.
Giles, what's your outlook?
Well, I think 300 billion is the tip of the iceberg. I think we are, in a sense, at the sort of start of a perhaps 10, 15, 20-year period, which is an inflection point in infrastructure investment. I think when you look at the drivers for new infrastructure, firstly, you've got the fact that we've been through a period of historic underinvestment in our existing infrastructure, not just in the UK, but overseas as well. So that drives the need for improvements in our roads and our railways. We've got technological change, we've got electrical vehicles, we've got the changes to our energy networks that need to support electrical vehicles and the decarbonisation of our economy. We've got demographic change, changing the nature of the housing we need. We've got the need for more housing more generally for the population. There's a whole host of major drivers for infrastructure investment. And the level of investment cannot possibly be met by just public capital alone. So a hybrid solution of public and private capital is going to be the solution. So I think infrastructure investing has been around for our fund now for 13 years, but actually we're only on the cusp of the opportunity.
I think it's very interesting as you compare the economic drivers you could imagine, the social drivers, but also environmental drivers. And I think that is often discounted when you think about infrastructure investments, but that seems to be a key driver of change going forward.
Well, when we look at our Thames Tideway tunnel investment, for instance, which is this new sewer, which will prevent the raw sewage that goes into the Thames on a regular basis flowing into it, the Thames will effectively become one of Europe's cleanest rivers. There's talk about having swimming and rowing competitions in the Thames, which was unthinkable a few years ago. So the environmental change is a big part of it. And I think more widely, as we start thinking about ethical investment policies for portfolios, and many investors now are thinking about the ethical impact of their own investments, infrastructure ticks that box too.